This is reality, and business is facing a kind of volatility that they've never faced. So this leads me to the big pivot. I stepped back and said, okay, if this world is changing as fast as I think it is, if these issues are as serious, then this is an all-hands-on-deck kind of moment for humanity. And that means business has to change what they do, because I don't think most of us believe that government's going to do it, for many, many reasons. At least in the US, the government's kind of broken. I mean, I'm not putting myself out on a limb. So I stepped back and said, what does it mean that companies need to do, the microeconomic? What does a company need to do to help bring about massive change in how the world works? And luckily, I think, I kind of listed these 10 strategies. I found companies that were doing every one of them. Nobody's doing all of it, but I was kind of glad. I was afraid that maybe I would just put out some theory and framework, and it would be like, that's lovely, but who's ever going to do that? Luckily, there's people doing every piece of it. But this was the logic for the big pivot. I got a couple CEOs to say nice things about it, including Paul Pullman from Unilever, who said, hand this to your nearest change agent, a must-read for anyone interested in the future of business in our world. I think he even read some of it. I don't know. He did the quote. But I just wanted to thank Unilever, because that actually is Jesse here? I don't think Jesse. Oh, you are there. You're not the tallest person in the world. I didn't know you were. OK. Jesse, my friend Jesse from Unilever, and it's amazing she came today because they had their huge meeting today of kind of announcing the end of their third year of their sustainable living plan that she completely organized, because there's like 2 people that do everything there. And they bought the books. So please, thank you to Unilever for providing them. And I think she said she'd buy 100 for each of you to give to your. You might have said that. So we are seeing a pivot. The good news, on the one hand, is that the economy is moving. The bank HSBC says that the clean economy will be a $2 trillion plus market by 2020. I think that's going to turn out to be a really, really low number, because what we're talking about really is shifts in all the biggest markets in the world, all the multi-trillion-dollar markets for building, for energy, transportation, consumer products, finance. Everything's under the microscope. Everything's going to change. But we already are seeing $250 billion a year being spent on the clean economy. That's a big number. The International Energy Agency says we need $1 trillion a year to kind of go at the pace, so we need faster. But this is fast. This is pretty good. And this is similar to the build-out of the mobile industry in the 90s and 2000s. So that's what I want you to imagine, that over the course of 20 years, we built a system that allows us to carry in our hands all of human knowledge. Right? Think about how different that is. We can call any of 5 or 6 billion people, and we can find out almost anything. My kids will be in the car, and they'll say, Daddy, how many stars are in the universe? Now, until recently, dads just made up answers to questions like that, right? 6.3 gazillion. Now shut up, So now we just say, let's ask Siri, right? So I just want you to imagine that this spending on the new economy will change the world at least as much as that. Some of it will be behind the scenes. We'll turn on the lights and somewhere a solar plant is discharging from a battery or something. But there's going to be changes in how our lives work that we maybe even can't imagine. So this led me to kind of think about the pivot in these kind of key strategies. I'm not going to go through all these in detail. I will say there's kind of 3 big buckets. There's this idea of a vision pivot, changing how we see the world. That's the fundamental thing. Thinking about the long term more, setting goals differently. I'm going to go into a couple of these kind of briefly. There's a pivot in valuation. I don't mean values, not like ethics, but in how we put numbers on things. What do we value in business? How do we value the natural capital that's so hard to put numbers on? How do we make investment decisions? And how do we value people? And what are we incentivizing them to do? That's what it kind of often comes down to in companies. And finally, this partner pivot, which is a change in how companies work with the world. With governments, they have to lobby, I think, in a very different way than they do today. They have to collaborate with each other differently and collaborate with customers differently. This is one of the things Unilever does, and I'll talk about later, is ask customers and inspire them to use less in a very kind of careful way. At the core, this is about building a resilient company. And what do I mean by resilience? This is the hot word in sustainability now. At base, it means the ability to kind of take bad things happening and kind of survive. Now, when Hurricane Sandy hit, part of Con Ed's grid got wet and it exploded. And the lower Manhattan was dark for 4 days. I think if your grid gets wet and it explodes, it's not resilient. That's just, I don't want to be overly technical, but not resilient, right? So I have some clients that have realized in factories around the world, as there's more and more floods, they have to move equipment to the second floor. One of my clients, it took 3 floods, but they finally realized they should move it to the second floor, because that sounds expensive, right? That's when, oh, that's expensive. It won't happen again. This is not resilient. And the world is realizing, in particular Europe, that they're not in a very resilient place, because 1/3 of the oil, natural, and gas going to Europe comes from this man. Now, as a big petrochemical producer, I know they can make polyester shirts. There is something he could wear. But think about, why has Europe been pretty quiet about Ukraine, right? It's this. They're not resilient to Hurricane Putin, to the change, the political change that came, that hit almost as quickly, right? Companies are realizing this too. This resilience argument is a very big one. Walmart is the largest buyer of solar power in the country outside of the military. I'm not talking about the military much, but if you're interested, Google Navy and greening, there's a lot going on. Why is Walmart doing this? Well, it's good for their business. People don't. I think I'm surprised how many other companies don't realize this. They think they're doing it for show or something, but they're the largest buyer of solar power. They are upping their solar and renewable energy by 600% by 2020, and they have renewables on 1,300 stores. None of this has to do with wages or all the other reasons we could have a long conversation about Walmart's existence in the world. But as a buyer of renewable energy, it's very real. Those are real solar panels. Those are real electrons they're capturing. But one executive last year talked about this in a way that I thought was critical. He said, this allows us to keep our stores up and running no matter who else is down and whatever the weather is. That's resilience, right? That's kind of aggressive resilience. We can sell more stuff while other people are down. And I just remind people that none of this came at additional cost. They're using the model of a PPA, which many of you probably know, which means you lease your roof, you buy the power just like you would from the utility. They're not spending a penny more. So some would argue, so what's so green? What's so amazing? They're getting renewable, and that's fine. I think companies should do a lot more of this. So we have the technologies now. That's the upside. We actually have the technologies to drastically reduce carbon. And the other word that companies are using these days is about decoupling, that we still need to grow. We're going to go from 7 billion to 9 billion people over the next generation. People come up to me and say, what about population? What do you want to do about population? We can do some things to reduce it, but there's going to be population growth, and there's going to be an increase in middle class and upper class people around the world. They're going to want more stuff. So we need to provide a quality of life while using less material. And Nestle did this over 10 years. They grew their production 50% while reducing energy waste, water, greenhouse gases. And I would argue they also decoupled themselves from the market. Their stock price kind of went up a lot more than the rest of the market. It's not the only reason why, but it clearly didn't hurt them. Again, there's still this very big misperception in a lot of business that green stuff, maybe we have to now, but it's really, really expensive. There's still that perception, I think, in businesses I talk to. Now, Eben asked me to kind of talk a little bit about what's maybe different from green to gold to this. I'd say, read the book, but I want to talk quickly about that. I do want to say that, thanks again to Unilever for buying it, but I want to ask another favor, which is that you actually read some of it. And that sounds crazy, but I know people's time is incredibly valuable and that it's hard. And I appreciate you coming tonight, first of all. But please read at least the introduction, start it. And for people who know a lot about this, skip over a few chapters and get to the strategies. But I did want to say in chapter 4, I talk about this, and I don't go into detail on this because I just kind of leave it for the more advanced person who's been thinking about this a lot to kind of just stare at. And I talk about the 3 views that I think companies tend to have: in the traditional view, in the clean and green, which is kind of the green to gold view, which is green is good for business, and now the pivot, and how there's kind of subtle differences. And so I give a bunch of examples, just a few here. Like, for example, we're going to move our operational focus from what's within our own grasp to a value chain to systems. Right? That's the discussion now, right? It's about systems. We're going to move from an operational model that's linear, that we got really good at from Henry Ford on, all the way to circular. That's the new discussion. We have to think about capturing materials. And we're going to move our impact and footprint from something that just happens for, just, if we want to have products, there's going to be a footprint, to something we should reduce incrementally, to zero to regenerative. That's kind of the next level. These are key concepts that we're going to have to build into our systems. The goal of sustainability as a kind of project in companies is moving from what was just public relations and branding to, I think, basically cost and risk cutting, to now about how relevant are we to our customers? How much can we flourish? This is a hot word as well. Can we survive? Do we have all the materials we need? This is about actual functioning. And then on a few ideas around the philosophy of how business thinks about things like risk. I think in the past it was like, well, we've got insurance. We don't, if a storm comes, we'll be fine. There was a kind of phase of we're going to measure it and be prepared, and now there's this idea of resilience and anti-fragility, which is the book by Nassim Taleb that is a big basis of my resilience chapter in the book. This idea of coming back even stronger, being anti-fragile. It's a really awkward word, but a great concept. And finally, this is the core of the pivot, that what is the purpose of a company to society? I think for many years in the traditional 20th century business, We provide jobs, we provide we provide products to people. I think in the green to gold kind of world, it's like we do that, we do it a little cleaner, you know, and we're trying to not cause damage. And now it's about, do we solve the mega challenges? This is the big pivot. The core of the book is that we have to move from short-term earnings first, solving mega challenges if we get around to it, or if there's a hurdle rate that's okay, or if people are bothering us, NGOs are bothering us, to operating in a way that solves the mega challenges and works back from there. To how do we do that using capitalism and markets and competition to do it most profitably. And we're going to decouple our growth. And then finally, the mega challenges, I think, were unaware for business. They were like kind of outside our realm, to maybe starting to dawn on people that there's big challenges like climate change, to what I call fully activated or just plain humble. That came up a lot today at the Unilever meeting, this idea that we have to combine maybe a little arrogance that we can tackle really, really big things with humility, right? Humility about our role in the world, that we are just one player, we're the dominant player. So I've never gone through that with anybody, and the book doesn't really explain it in detail. It's kind of meant to just kind of stare and make you go, huh. The rest of the book is a much quicker read, but please just spend some time with that page and see what you think, and let me know what you think. So let me talk quickly about vision and what I mean. I'm not going to go into this. I think, in reality, I feel like if we tackled these first two, fighting the short-termism that's kind of dominant in business today, and setting goals based on science, like what has to happen, the rest would kind of fall into place. Those are the two really biggies. I'm not going to talk a lot about the short-termism. We can talk about it during Q&A. But basically, as we know, executives are under ridiculous pressure to meet quarterly earnings. And we are facing what's a market that I think is like completely irrelevant to the stock market of 10, 20 years ago. I just read the book Flash Boys by Michael Lewis, who's a great writer, so read that after you read mine. Really fascinating, really just infuriating about what's going on, that there are people just taking a piece of the market by trading faster and faster, all in milliseconds, meaning they buy something and sell it within milliseconds. That's over half the shares. This is now a casino. It is not shareholders. There's a pool of shareholders still, pensions and longer investors. But there's a huge chunk of the market that's moving for no reason having to do with the value of the company. And so you have a few very surprising leaders, very brave leaders like Paul Pullman, who said 4 years ago, I'm going to stop talking to Wall Street so much. And he said to his peers at the World Economic Forum, look, if you buy into this long-term sustainable shared value model, come and invest with us. If you don't, I respect you as a human being, but don't put your money in our company, which is, I think, a nice way of saying he doesn't respect them as a human being. You know, I think that was a very nice way of saying, you know, go do what you want. And then we saw recently, it only took 4 years for another major CEO to tell an investor to buzz off. But Tim Cook, a very kind of active investor, came in and said, we're sick of you doing all this environmental crap, which was a very small paraphrase of what he said, because they've been doing a lot of renewables. 100% of their data centers are renewable energy related. Not all on-site, but lots of renewable energy. And he said, look, first of all, a lot of the stuff we're doing for the environment, you know, actually makes sense economically. But then he basically went into this thing about, I'm going to do things that don't fit a perfect ROI. I'm going to make strategic choices, and I'm going to do things that matter for society. And if you don't believe that or want that, get out of the stock. Which, think about that. A CEO stood up and said, get out of the stock. Now, he has $160 billion in cash, so he can tell them to do whatever he wants. But yet, he's only the second CEO, really, to do this. And my only problem with this was that I wish he had actually spent more time on the this is good for the business, that we're doing this renewable energy for all these other reasons. It saves money, it makes us more resilient, lowers risk. But he still got into this, he fell into this kind of trap of, if we're talking about this stuff, it must be because we're doing it because it's the right thing or because it doesn't meet normal kind of investment. And that's unfortunate, because I think this stuff does. That's kind of the point. So I want to talk a little bit more about how we set goals.